they've put in an offer to purchase property closing in March, but it was conditional upon them selling their property, and they have until February 22nd. They've had 18 showings, no offers.
You're listening to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. And now, here are your hosts, Paul Stevenson and David Warren.
Welcome back to the Ottawa Real Estate Podcast, your go-to source for all things Canadian real estate. My name is Paul Stevenson. I'm a Level 2 mortgage agent. I'm joined by David Warren, who is a Level 2 mortgage agent and owner at Referral Mortgages. We are back here to give you the latest and greatest in Canadian real estate news and updates and what's happening in the market. I want to give a quick shout out to our sponsors, Gerté Poirier Avocat Lawyers, Big Insurance in Westboro, Centum, and Easy Neon Signs. Use the promo code TOREP, you get 20% off each and every order. Last but not least, if you have questions about mortgages, our contact info is in the description, so reach out to Dave and I. David, how you doing?
I'm here. I'm here, Paul.
Fantastic.
I'm here.
You look great.
We're both firing on all cylinders.
Yeah. For anyone who's listening, it's funny. Dave and I obviously, love the show, care about the show up every Tuesday, vibrant, ready to rock. Some days you just don't have the juice, and we both showed up today juiceless. And our producer is getting over her sickness, and we're just all sitting here ready to go. We're here. We showed up, Dave, and that's half of life, showing up,
We apologize ahead of time for anyone listening.
Yeah. I'm going to start off with something real simple here. We're going to get into the stats for January, because I know this is always a hot topic, and I have the December ones right below, so we can do an easy contrast here. I highlighted the months of inventory because to me, this is something that is important to understand, and days on market. So we look at January here compared to December. For January, the days on market was 49, which was up from 38. So pretty stagnant. I think we actually said that in December. I mean, this is not abnormal for there to be longer days on market in January as people kind of lead into the spring. New listings, 1,522. Benchmark price for single family, 183,000. So that's actually down from 697,000. 49 days on market, as I mentioned, up from 38. 2,673 active listings, which is up from 2,500. So, pretty much on par. Benchmark for apartments, 386,600. And that is down from 386,800. And last but not least, properties sold in January, 610. That's up from 587 in December. So here's kind of like the overall January stats. We got months of inventory here at 4.4. New listings, as mentioned, 1,522. And active listings, 2,673. Anything in there, Dave, that surprises you, that you think is out of the ordinary, or anything that people should be aware of?
I think just the days on market, it really kind of obviously shows and boils over to more of a buyer's market. It's been a buyer's market and kind of even playing field, but at 49 days on market is on average is obviously getting into the longer sell cycle. So for people that are needing to move, needing to sell, keeping that in mind and planning accordingly. If you're a realtor trying to press a client, or really kind of keeping that in mind. 49 days is you're into the second month, and that's an average. So you still have some that are selling super quick, but that means most properties, by and large, are sitting for several months before any activity. So just kind of preparing accordingly.
Yeah, that's a fair point too, because the average days on market being 49 means, at least half of them are sitting much longer than that. And we were talking about this quickly before we came on air, but I am seeing that now where clients have got into kind of that agreement of, right of first refusal. I have one that's expiring on the 22nd of February on their purchase, meaning that they've put in an offer to purchase property closing in March, but it was conditional upon them selling their property, and they have until February 22nd. They've had 18 showings, no offers. So they're kind of in a position now where they're thinking, okay, we're well over that 40. Well, they're pretty much coming up on that 49 days on market. They have to sell in the next, 13 days, 12 days. Otherwise, they're going to lose the property they're purchasing. Now, good news is they have that safety net, right? At least their realtor was able to put in that clause so that they have the ability to get out of this offer. But this is happening frequently. I've seen this a couple times now recently where clients have to sell their property and just aren't able to, or they need to sell it for a certain price point and just can't get to that price point. They're getting offers that are lower than that, and they kind of need that purchase amount or sale amount to be able to get the down payment they need to qualify for their next home. So we're kind of in this rolling cycle of people kind of getting stuck on the sales side but trying to get into something new. Are you seeing that too, or what are you kind of seeing in that regard?
Yeah, I mean, same idea. Like clients not able to sell. It was kind of the same, like a lot of the same last year. People either like buying, pushing it out months, but for some reason not having the urgency to list as well. And then sitting with a property and losing out, either not able to waive that condition of first right of refusal, or just in general getting stuck being like having it firm, not selling their property because it's been sitting too long, and having to go the alternative route of like private lending or whatever it may be because they just don't have that down payment. But I definitely see it still very regularly with that. And I don't know if it's like, it's kind of a chicken and the egg situation, obviously, of like list your house, then buy, find a house, then list, what's better, what's worse. But yeah, it perplexes me that the buyers that need to sell their property are not, for whatever reason, are not urgently getting their property on the market either. Like they're finding a place without being ready to list their house, like the day they find a property, which then sets them behind the eight ball where then they can't go and waive that condition, or they're stuck getting that private financing because they just weren't ready. But it continues. It's like the cycle kind of continues all the time with clients.
Yeah, and there's no perfect solution. Especially you kind of have to look at the market conditions right now. At least, we're talking February, we're leading into the spring market, so it probably will shift slightly into a more balanced market. But as it stands right now, especially with those days on market increasing, like the onus is really, like, buyers have the cards right now. Like they hold the cards. They're the ones that are in control as far as what's happening. So to me, like, you're much better off listing your home, get an offer, push it out, 4 months so that you have a good window to find something. And especially leading into the spring, we're going to see a lot more listings coming on the market in the next probably 30 days. I know a lot of clients that are kind of prepping and realtors that are doing photos and getting ready to list. So we're going to see those active listings probably increase, which we don't know. Will it decrease or increase the days on market is yet to be seen. But I would say if you're in the process, if you want to buy something new, list your property first, get that offer, then go out and shop, knowing that you're kind of in the driver's seat, and you'll still have a lot of options. The downside of that is that you're, when you do that, especially anyone who's bought and sold a home, you're then at the mercy of the market. Like if your place is sold, okay, well, now you have to buy something, and it has to be something that you find in the next 4 months, right? Which might not be what you're looking for. So then you're going to settle for something maybe that's less desirable just because you had to sell your place first. Now, there's no perfect scenario, but to me, that's a less riskier endeavor than buying something and then scrambling and having to sell your place at a discount, and that's kind of what we're seeing more frequently right now.
Yeah, I would be interested to know. Obviously, there's no way of like a correlation, but we've obviously been going through frigid temperatures. I feel like that days on market through January is also a byproduct of people just not wanting to leave their house.
Yeah.
I think we had 17 days. I heard, like, read yesterday, it was 17 days below -20 or -25 in the last 2 months. Like, I don't think people want to leave their house. I certainly don't. In the temperature, so let alone going and looking at properties. Like, so I would imagine, it's kind of similar to spring. Like people just don't want to hibernate in the winter. They don't want to go out. So right now is certainly, there's not a lot of buyers out there. People can get good deals. But yeah, I think that correlation of weather probably, like certainly this past month of it, how cold it's been in Ottawa, I'm sure has plays into it.
Yeah. And the other thing that we kind of touched on a few weeks ago, but the other thing that we're seeing is with regards to renewals, people that are wanting to sell their property now, maybe the property is, no longer affordable, with the new rates, or, we're seeing a lot of that kind of, we are still seeing some sticker shock. I know we talked about it not being as bad, but the rates people are still seeing their rate go from, 2% to 4% or what have you. So we're seeing a lot of people list their homes when they come up for renewal, but they're going to get kind of stuck in that rotation where, I had a client reach out, mortgage is up for renewal May 1st, but they're getting ready to list their home. So they're wondering, what options do we have as far as not renewing, maybe renewing into an open term or variable, right? Those are kind of like the two best options you would say until their place is sold. And what that means, just for anyone who's listening and doesn't understand that, like if your property is up for renewal, your mortgage is up for renewal May 1st, and you list your property for sale. Well, let's say your property doesn't sell till June 1st. your mortgage renews in May, you don't want to renew for another 5 years and then get a massive penalty to pay that out 3 months later or 2 months later, or a month later, I guess, in that case. So what you would do is you'd put it into, lenders will typically offer you what they call an open term. So it means that the mortgage is typically for 6 months and it's completely open with no penalty associated, meaning that when your place sells in a month, you can pay off the mortgage in full and there's no penalty associated. Now, those are typically at much higher interest rates, probably closer to, I don't know, 7, 8, 9%. But it is made for the short term for this exact sort of scenario. So, if you're in a situation like that or something kind of wonky, or someone that's in a renewal cycle or a listing cycle and they're not sure exactly what to do, again, have them reach out to Dave and I. We can go over all the options and solutions and different bridge financing and, restructures, open terms, all that jazz, all the fun jargon we deal with every day, Dave.
Your home is one of your biggest investments, and the team at Big Westboro can help you protect it. Our expert brokers will find the perfect coverage to keep your home and belongings safe. Call 613-239-5792 or visit thebig.ca/Westboro for a free quote. Think big, protect what matters most. Are you thinking of buying or selling a residential property? Relationships are at the heart of every real estate transaction at Gertin-Poirier Avocat Lawyers. We love to bring residential buyers, sellers, agents, lenders, mortgage brokers, and the law together to close the deal for you for an effortless client experience that opens doors. Call us at 613-744-4488 or visit our website at gertinpoirierlaw.ca. Let's get to the heart of your deal. Are you trying to grow your mortgage business? Centum has the tools and support to help you take your business to the next level. Get access to everything from free unlimited custom marketing to daily direct pay. Find out what your business can do with Centum. Learn more at joincentum.ca. This episode is brought to you by Easy Neon Signs. Visit easyneonsigns.ca and use the promo code TOREP, TOREP, to get 20% off each and every order. easyneonsigns.ca, Canada's finest custom neon sign maker.
So completely getting off the topic of this past month's Ottawa stats.
Yeah.
We're kind of came across, it's not the Ottawa market, but it's in Nova Scotia, and kind of leading into, talking about, the slow sales cycle right now and obviously days on market. Nova Scotia they've had a boom in their real estate market and it's continued to boom. Nova Scotia actually brought in, which is really interesting because it's outside of even the insurers programs of 5% down, where they're offering people to go with down payments as little as 2% down. So they have a pilot program for first-time home buyers that is allowing them to get in with only 2% down payment. And what they're doing is the province has partnered with credit unions to bridge that gap of that extra 3% and guaranteeing that loan on the provincial side to let first-time home buyers get into a property. The maximum purchase price being $570,000 in Halifax or $500,000 anywhere else in the province. But they are kind of doing something that is very unique, and I'm interested to get your take on this program. Whether you think it's a good thing, whether you think it's a bad thing, how do you think it's going to impact the market as a whole in Nova Scotia?
Well, great question. I mean, we saw 15 years ago in Ottawa, we were talking about this, that there was 40-year amortizations and 0% down payment. And the market at that time, at least, no, I was fairly new into real estate at that time, but the market wasn't just, exploding. It's just based on the market sentiment at that time, what's happening, are things moving? They're obviously introducing this program because first-time buyers probably feel like they can't enter the market or they can't save the money needed. So I think it is good for first-time buyers. We need that kind of next generation to be able to at least enter the market in some capacity. So I think for them in this, in this one location, it might set a precedent for other areas of Canada to take, a similar stance. I know here in Carleton Place, considered Lanark County, we actually have a program here. And this is just to kind of show that different communities have different programs that can help first-time buyers. So this is actually a home ownership program designed for people that are first-time buyers that may not have the actual down payment availability to buy a home. So if you're renting within the county, so within Lanark County, and you're a first-time home buyer, household income of $122,000 or less, and the home value has to be not over 543,000, they will actually contribute up to 8% of your down payment. Like they'll give you a 8% down payment towards getting into home ownership, which is pretty incredible. Like if you're a first-time home buyer and you don't have any money put aside, or you're kind of in a position where you maybe want to own but are currently renting and don't see any way out, in the county there's a specific program for that. So again, I'm not pumping Lanark County's tires. I mean, I do think it's a good program, but all this to say, like, there may be programs like this available in your local area that people aren't even aware of, that go outside of those kind of government or national, provincial kind of regulations. So worthwhile looking into. And I mean, in this case, 8% is, I mean, that's a actual pretty much a capital gain you're getting. You're getting forced equity in your property without putting anything into it. It's incredible. It's a great program, but it's a very niche market, right? Like they have money allocated for that. But I mean, this could be happening in a bunch of different districts that we just aren't aware of.
Definitely not in Ottawa, but to your point, like the smaller townships that are looking to spur economic development, bring people in, like into that community, they do have those. I think there's a timeline of 5 or 10 years you need to reside in your home, otherwise you need to repay it or something like that.
Yeah, exactly. It's very similar to the national program they brought out. Remember, they had that one that we said nobody would ever qualify for. I think the national program was a little more stringent on their rules. Remember, it had to be like no more than X your income, and you can't make more than 100,000, and the property has to be less than 5. It was like the numbers literally. There was like one house and one client that could qualify for it, and there was like billions of money left on the table. This one's a bit different. This one's actually practical, and like, a household income of under 120,000. If you're one person, I mean, that's very realistic. If you're two people, I mean, if you're both making 50, 60,000, like that's very reasonable. Like this is at least like the guidelines are within reason as a home buyer, under 543, like, you can find out in this area, you can find a single family for 500,000 outside town, like there are people that could fit into this actual mold, whereas I felt the national one was a headline grabber, but there was no one really that it was helping. It wasn't like a real value add. It just kind of looked good. It was a good talking point.
Yeah, no, it's a good point on the Lanark program, because a lot of people don't realize that those are available or even look to them.
Yeah, and the last thing I wanted to touch on, Dave, which I know, again, changing gears, but RBC, and this might not come as a surprise to some of our listeners, but others it may. RBC Economics basically put out an article highlighting the downward pressure on the Canadian home prices and saying that it's due to the weak demand and growing supply. So there's a lot of things that factor into this, but the main findings that came out of this article, that the early market data from January shows demand declining faster than supply. So we kind of looked at that in the numbers. And this was across major Canadian cities. Sales in key regions like Toronto and Vancouver fell notably, which is crazy because they were already super low, while available inventory rose, keeping the market in the buyer's favor. So again, buyer's market kind of across the country. Some markets such as Calgary and Regina saw slight sales increases, but inventory still outpaced demand. And elevated inventory and weak demand suggest price growth will remain subdued in the near future. I mean, even in Ottawa, we saw that the month-over-month numbers were declining as far as the overall, like I think the single family was 18,000 difference, and the condos or townhomes was a $6,000 difference, decline going in. Now, again, December, January, kind of the off seasons. Do I think we're going to see that continue into May? Probably not, as we see buyers kind of step in and pick up those properties. I mean, that's the snapshot of the market today. So, as much as we want to pump tires and pump the market, we have to go with the current data, okay? And the current data is showing that prices are declining and listings are escalating.
On that note, should we slide into some mood boost?
Okay, so let's see what we got today. Number 1, who won the neck decorating contest? No one. It was a tie. Yeah. Number 2, where do rainbows go when they've been bad? To Prism, so they have time to reflect on what they've done. Number 3, dogs can't operate MRI machines, but cats can. And last but not least, I'm going to leave it there, actually. I think that one's perfect. That was a good way to end it. I'm going to leave on a high note here, Dave. And thank you. This was a short and sweet episode, but I think we covered the majority of the good headlines. We covered the stats, Dave. Thank you, everyone, for tuning in. We'll be back next week. And we have actually an exciting new sponsor that's going to be coming on next week. We'll announce it next week. We just want to say thank you to everyone for listening. Thank you to our current sponsors, Gertin Poirier Avocat Lawyers, Big Insurance in Westboro, Centum, and Easy Neon Signs. And thank you to everyone listening. We do really appreciate your listenership, and we'll see you next week.
Deuces.